Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Ryan McCormack, Core and Factor Equity Strategist at Invesco, to discuss weekly performance in the Nasdaq-100. We'll also take a look at the market's reaction to recent inflation data. Ryan, it's great to see you as always. Welcome back to TradeTalks, and let's walk through, before we get to the Nasdaq-100 performance, how the market reacted to the pause that the Fed took and also the dot plot data.
Yeah, so it's always interesting on Fed Day, and you know, I think as we've talked over the last number of months, it almost seems like the press conference is more important than the statement. But effectively, you know, what we saw was the Fed, the Fed going through with this highly anticipated pause, right, in an effort to kind of see the effects of all the policy tightening that we've seen over the past 15 months. And they noted that, hey, this is just a pause. More than likely we will resume tightening in the fight against inflation. But markets sold off pretty much immediately at 2 o'clock, right at the time of the announcement. That was largely because of the updated dot plots, where Fed officials saw the Fed funds rate increasing to 5.6% by the end of the year, and this was against the previous round of projections at about 5.1%. 2/3 of policymakers saw projected rates at 5.5% to 5.75% or above, which effectively implies 2 more rate hikes this year. So initially, markets sold off, and then right at about 2:30, again, when Powell joined for the Q&A, we started to see stocks rally. And it may have been a response to one of the early questions. They talked about July as being a live meeting, meaning that they're going to be data dependent, and depending on where kind of the June inflation data comes in, a 25 basis point hike for July isn't necessarily baked in. And then I think from there, you look at the Fed funds futures, and the market isn't necessarily going, lockstep with the updated dot plot projections, where they're seeing a peak rate in September of about 5.3%. So I think, this notion of data dependency, this notion of the market not necessarily moving in lockstep with Fed projections, all happening within the last hour, have just been a lot of action.
Yeah, it certainly has been. Ryan, let's pull up your first chart here once again. Let's take a look at weekly performance in the Nasdaq-100.
Yeah, so we saw QQQM and QQQ up 2.36 and 2.35% respectively, outperforming S&P 500 up just about 2%, and S&P 500 value also up just about 2%. I think as we look, we see continued optimism around things like AI. And I think from the market perspective, a lot of this was leading to today's Fed announcement and some encouraging inflation data. I think, at least in the market's eyes, earlier this week, that today was in fact going to be that Fed pause.
And moving along, let's take a look at some of the CPI data as well. It seems to be that we're getting certain areas within inflation data that are on the trend of improving slightly.
Yeah, I think that, and I think that's it, right? And we saw markets get a bump on Tuesday. May CPI came in around expectations, right? So you had the headline reading 10 basis points below projections. That came in at 4% versus projections at 4.1. The core year-over-year reading was 10 basis points above expectations at 5.3% versus an expectation of 5.2. Earlier today, we saw producer prices for May reported lower than expectations on a year-over-year basis. And I would say largely kind of this inline year-over-year readings that we've seen over the past 2 days from the market's perspective is, okay, we're starting to see these prices come down a bit. It is warranted for the Fed to hit pause, and we may be heading towards the end of this Fed hiking cycle.
And finally, Ryan, if we take a look at the sectors that were leading the way.
Yeah, so over the course of the week, overweights to information tech and consumer discretionary are really the two sectors driving outperformance. Those two sectors also happen to be the best performing within QQQ for the week. Looking under the hood from a single stock perspective, QQQ's overweight to Tesla was the largest contributor to relative performance. Stock was up nearly 17% for the week. This came after GM announced that its electric vehicles will start to use Tesla's supercharger network. About 3 weeks ago, it was announced that Ford is going to enable its electric vehicles to use the network. So sort of a marked change from what we had seen previously against from the competitors. And then last week, it was also announced that all versions of Tesla's Model 3, they're going to be eligible for the full U.S. tax credit, where previously only the long-range Model 3 was available for that credit. And then Netflix, also a very large contributor to relative outperformance after the company traded higher by over 9% for the week. A report showed that after Netflix's crackdown on password sharing, that subscriber growth increased, to the point of doubling from its previous 60-day average. And there were 2 days where saw nearly 100,000 signups per day. So I think there was a lot of worry around the password crackdown, but seemingly it's fueled a new wave of subscriber growth.
All right, Ryan, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.